What is up, everybody? How are you all doing? And welcome to today's new video where we are covering the 7 a.m. Judas swing in indices. Now this Judas swing is based around indices and uses the 7 a.m. time frame in New York time. So be sure your trading view charts are set to New York to be able to navigate this correctly. So the premise of this is we have a daily bias in mind. At 7 a.m. New York time, we want to see a Judas swing in the opposite direction to this bias. Now, this Judas swing may take out liquidity or it may not. It may trade into a PD array. That is fine. In this example I've got here, you can see if we look to our left, we take out this high up here. So the Judas swing that happened at 7 a.m. takes out the high, and then we look for framework to hold towards our target on liquidity. So the focus will be on navigating this 7 a.m. Judas swing, when we can expect it and what sort of things you need to look for to be able to trade this. Now, in the example you see here on your screens, we are on a higher time frame bullish, and this is our long-term draw on liquidity. Now, as you can see, I have 7 a.m. marked up. And remember, if we're bullish, we want to see a Judas swing lower at this time. Price does exactly that. Takes out a low inside here. We sweep that liquidity down to the sell side, and then we trade higher and into a 15-minute order block before rejecting. Now, I want to take you into a 5-minute time frame just to go over how we would frame a trade inside these conditions. Now, as you can see, we are on the 5-minute time frame. We have that long-term high up here, and we have that sweep on sell side liquidity just here. This 7 a.m. move is our Judas swing, as you all know, and then we trade higher, trade lower. I wouldn't personally get an entry inside here, simply because we just tapped into 50% of a retracement for me, and I would want to see a deeper retracement. As you can see, once we do that, we get a leg higher, and what piqued my interest for this returning to a deeper retracement and sweeping sell side liquidity in here was the fact that this high, as we moved higher, didn't take out this liquidity here and didn't take out this liquidity here. Now remember, our equal highs on the 15-minute time frame, those are these two highs. So we traded back down into what we can call a balanced price range inside here. One candle straight down and then straight through the other side. This becomes our balanced price range, and this is the sort of retracement I want to see. We take our range. Why is this our dealing range? Because we sweep sell side, so this becomes our low of interest, and then make a high, which takes out liquidity here. This becomes our high of interest. This is our dealing range from here to here. Deep retracement into the 70.5 level, and then as you can see, we work from here. If you missed that, that's no problem, because we get a leg up, and what do we leave behind? Inside this leg up here. So we traded into the balanced price range and moved up. Inside this price leg, you can see we have a down close candle. Now, as we all know, when we're looking for buys, down close candles should support price. In this instance, it does. We wick into it and close above. As soon as we close above, and I see that, that is my one thing to say, okay, we're probably moving higher here. That's my signature in price. We wick in again, close above once more, and then a third time and close above. You could be a buyer inside there 3 times. So as you can see, there were 3 opportunities to get in here, and then we go long, take out the liquidity up here, and get a nice run towards this high. Don't take out the high. We engineer liquidity for the PM session inside here, and then work our way towards this longer term high. So I just wanted to give you a quick example of how we can actually use the Judas swing and then drop down to a lower time frame to find our entry after knowing that the Judas swing has occurred in the opposite direction as our draw on liquidity. Now you can factor in time into this as well, where we want to see a Judas swing at 8:30 or 9:30 again. Now think about it. If we want to see a Judas swing at 9:30, right? If we've already had a Judas swing at 7, cool. And then now we're looking for buys. That Judas swing at 9:30 that we may see, we can keep in mind, we may see it as a retracement. In this case, look, we have our 930 candle, we open up, we retrace, and this retracement is the one that came back into this balanced price range. When did this retracement happen? At 930. That counts as a Judas swing as well. Because our draw and liquidity is higher, we've already had a higher time frame Judas swing at 7. We trade higher, and then at 930 expect another Judas swing, which gives us our retracement. Do you see how it all ties in together when using factors of time in the indices market? Now remember, this is important because in Forex we use the midnight open for our Judas swing. When bullish, we want to see a retracement below that midnight opening price, and then when bearish, we want to see a retracement above it. Now in this instance, we use the 7 a.m. and this is only for indices. So NASDAQ and ES or the S&P, and YM, which is the Dow, we want to see the 7 a.m. Judas swing. Okay, so we don't use midnight price. I like to use this time. Now for our final example, in this one, the draw on liquidity is lower, and I want to show how the framework before the 7 a.m. Judas swing can actually help us. Now, as you can see here, during London session, we created a high, a low, a higher high, and then broke down lower. Now, remember, we are bearish on a higher time frame, so we want to see a Judas swing in which direction? Of course, upwards, because we want to trade it lower. Now, we have a breaker inside here. So we take the down close candles and use it on the other side. Now, our 7 a.m. Judas swing upwards takes us into the breaker, and that would be your sell. As we trade into the breaker, you would be going short with your stop loss above here or above here. Because it is a swing high, we have a short-term high and a short-term high either side of it. Or to be safe, we have the breaker. You could put your stop loss here or here. Now, we go short here because we can trust that this breaker should hold, and that swing is enough to give us a Judas swing and trick buyers into the market. Because remember, on the 1 minute time frame, as we're printing this upwards, this looks really bullish, right? This looks very bullish to retail, and they want to go long here. So we look and see we have a breaker with a Judas swing at 7 a.m. That is our short, and we go much lower from there, as you can see. So yeah, that is just a quick example of how we can use the framework before 7 a.m. to actually help us predict where the Judas swing will go to, and then of course we work down from there. Now that brings us to the end of the video. Just a quick one today covering this 7 a.m. Judas swing. I hope you found it useful and will implement this into your trading when looking at indices. If you did, please do drop a like and subscribe. And the links to all my socials are in the description. I'm always active on Telegram, and that is the best place to find me there, and on Twitter as well. So yeah, find my links in the description, and thank you for watching as always. I will catch you in the next one.